Good day everyone, welcome back to my channel. Today's video I'm going to go a little bit more in depth on how I look at market structure and what I look for. It's going to be a nice short video. We're going to jump straight into the charts. If you haven't seen my previous videos, please go have a look. If you're new to the channel, the other videos will also go in a little bit more detail of what I do, how I trade. So yeah, let's get straight into the video. Alright, so as you can see, we are on Boom 500, the 1 hour. I'm just going to use the 1 hour as an example, just to go both ways. As you can see, the 1 hour completely, the spikes disappear. It looks like a normal market. So let me show you some examples, what I look for in a market structure shift to make it nice and valid. Awesome, so let's quickly look at this price action here. As you can see, we created relative equal lows. There is a nice order block and a fair value gap here. So there's the fair value gap. There's the order block. So as you can see, when market, but I only look for it when market is in a point of interest. As you can see on a bigger time frame, it's a fair value gap inside an order block as well. If you go like onto the 4 hour, now this is going to be, this is a good confirmation for me. Equal lows is being created. We tapped into our order block and now we're waiting for market structure. So where's the last fractal high that was created before we tapped into our point of interest? It was this high here. And as you can see, it broke it with a nice body. So I would classify this as my market structure shift. And then I'll wait for price to retrace to the order block or fair value gap, the one that's the most extreme. And then as you can see, price came in, tapped, and it went. Now when you enter from an order block or fair value gap, always make sure your stop loss is below the previous low. And then you can target the next level of liquidity that will be there, and that's a 1.7 risk to reward trade on the 1 hour. Okay, so that's the first example. As you can see, for example, here, and this is how you need to backtest as well. You see where did price react from, why did it react from this. So now you look left. So this is how I backtest. And the more you do it, your eyes get used to it. So when the live market is happening, you can see this happening in the live market. So there's a big order block and small order block inside that big order block. Alright, so price reacted. Let's have a look. A high was created here. Let's just delete this quickly. As you can see, price went above the high, it took liquidity. Where was the last fractal low? It was here. So we have an order block there. So let's quickly see if price came and tapped us in. So this already happened before the price went down. If you go on the lower time frames, there will be a fair value gap on order block just there. And you could have target this one. Alright, so let's go down to the lower time frames to see if there's an entry we can refine. So as you can see, there's the order block I was talking about. So look, liquidity was swept, market structure shift. Now big order block there to refine our entry. We found it there and you could have entered your trade there. Now this is not only working on boom and crash pairs. Remember in my previous videos, I don't normally trade like this. I only trade boom in an uptrend and only trade crash in a downtrend. But here I'm showing you, if you want to, you can trade it like the normal market. Alright, let's go back to the 1 hour. Just go random back. Let's see what was happening here. No liquidity. No liquidity. Because we're in a downtrend now, so I won't look for buys. But here you go, here you can see. Alright, so let's see what price did here. So we consolidated. This high was never taken out. All of this weight only got taken out there. So this for me would be a liquidity sweep. Price came down. We wait for that impulse move. There's our first impulse move. So we can see here now as well. That's not the one. This is the fractal low that needs to be taken out, because that's the low that created this push up that took out the liquidity. So there was no significant impulse move. Here we get that move. What do we have? So this would be my market structure shift. Enter from an order block, and as you can see, there's a fair value gap there as well. You would enter from the trade. Sorry, wrong one. You will enter from the trade. Stops above the high, and then you can target either this next level of liquidity, or when you zoom out, this was the low that was created, and you can target that level of liquidity. So liquidity needs to be taken. You wait for your market structure shift with an impulse move, and then you will find your entry. Let's quickly see again what was happening. Now we're still in an uptrend here, so I won't look for sells. Let's have a look. See what happened here. Okay, price had a nice reaction from here. So what was on the left hand side, we had a fair value gap and an order block there, as you can see. Let's zoom in a little bit. Okay, is that low higher than lower than that one? No. All right. So let's mark this as our low. Liquidity was swept. We had a huge impulse move. Low, the high was taken out, so that's the market structure shift. Or if you can, that's a little bit high. If you want to refine your entry, let's just mark it out. Let's go on to the higher time frames, the lower time frames, then you can see how we could have caught our entry here. Let's see, let's try the 15-minute first. There we go. All right, there's our low, our high that was taken out. So that's our market structure shift. You'll see on the lower time frames that will be a fractal high. And what do we have? We have a fair value gap. Let's just delete, and you have an order block there. Let's just delete this one. As you can see, it was a nice move that broke that market structure. Let's say you entered at the fair value gap, stops below that low, and where would you target? Relative equal highs, because there's stops resting there. So that's where I would target, and there you got a nice trade again. Let's quickly see what's happening. And so now we're in an uptrend again. So here we had, for example, equal lows, relative equal lows, that was taken out. Market structure shift. If you can't see that one, you can use this one as a market structure shift. Okay, so we have fair value gaps and order block. So let's just do this, the two fair value gaps together. So let's extend this. Let's see if price reacted from it to the T, as you can see. Okay, let's just go back. All right, so that one was created. So we took liquidity, we had our market structure shifts. Let's see where we can enter. So this is a huge, nice up move. So now in a case like this, where there's a lot of fair value gaps and everything, I would draw my fib and only enter from 50% and below in the discounted area. So what was happening here? Let's quickly see. So we created an order block here. All right. Now inside of that order block, when you zoom in, you can see there's a fair value gap. But let's see what happened here though. Okay, so big impulse move. This is in the 50%. So if this trade doesn't play out, you will get stopped out, and I would look for my entry here. So not all trades is going to play out. You are going to get losing trades. For example, if you entered here and price literally did this, then you would have a losing trade. Why? Because you would put your stops there. So then you would have a losing trade. But now let's see what happened. All right. So price created an order block, big impulse move. This low was taken out when it entered the point of interest. That's our order block and our fair value gap. We had our market structure shift. And then again, it's a beautiful move. What do we have? We have an order block here. And the fair value gap that was filled. Okay, so I won't take that as an entry, because there's no significant entry point for me. Price went up, came down, reacted from the order block. Then again, liquidity was swept there. Market structure shift. Impulse move. And we have our order block there. Remember, those 3 candles is one order block. On the higher time frame, that would be 1 candle. And you can enter your trade. Stops below this low. You can literally target that one. That's a 2 risk to reward trade. If you zoom out, is there anything we can target? Can't go that far back. But in real life scenario, I won't leave this trade. I would take my trade and I will exit there, because that's the next level of liquidity. So that would be my point of interest to take my profit. So that's what I look for in a market structure shift. You wait for price to come into your point of interest. You wait for liquidity to be swept, and then that market structure shift with a big impulse move following. And then you just wait for your perfect entry. So yeah, if you guys like this video, please go like and subscribe, share as well. If you have any questions, please ask me in the comments. As soon as I get time, I will reply all of you. And yeah, then I'll see you in the next video. Cheers.